We have the management at Royal Orchid now joining us. So if you could just tell us about your expansion plans that you have, especially into the smaller ticket cities or tier 2 cities like Nasik and Kanpur. What has been the capex? How are you looking at this these particular areas?
See, these are all management contracts, so there is no investment from our side. In fact, this year we've added 10 hotels as we had earlier planned earlier than this year. So we added 10 hotels. There's no capex at all. So whatever earnings we get from the fee that we get from them mostly flows down to the bottom line. So they are all profitable. Of course, it's only the fee that gets captured in our revenues, not the total revenues that captured in our books of accounts.
Hi there, afternoon. Tell us a little bit about your hotels in Bangalore and Jaipur. Are they still making losses, and when can we see a turnaround?
No, I think both these hotels are now cash positive. It's only that little depreciation part of it which is showing some losses. But otherwise, both these hotels have shown significant improvement over last year in the revenues and the EBITDA. They've shown a significant improvement. So I think the worst is over. In fact, both these hotels are actually servicing their debt as well as the repayment. Repayment interest both are being serviced, which was a problem in the earlier years. So I think there's been a significant improvement in both these hotels this year.
Hi, this is Nayantara joining in from the New Delhi studio. Now, you witnessed an average occupancy of about 69% in FY17. How much could that increase in the financial year that has just ended, which is, of course, FY18? And also, what about the average room rates? What is that looking like, the revenue you earn per room, the average revenue you earn per room?
See, our occupancies have gone up by about 7% this year, and ARRs have gone up by about 3%. So there is a significant improvement in the room revenue, which goes down to the bottom lines largely. So there is I think there is definitely a significant improvement, and going forward, I think definitely the good days are coming. And I think next year we are very, very hopeful that the revenues, because the ARRs will improve significantly next year, because the occupancy have already reached about a peak level of 75%. So I don't think they could be very much, in certain markets we are doing much better. We're doing over 90%. In certain markets like Navi Mumbai and in Pune, we're doing over 90% occupancy. So there's not much of scope for improvement of occupancy there. So overall occupancy, I would say that, may be a marginal improvement, but there will be a significant improvement in the ARRs. So revenue should move up by about 10%, and which will mean that EBITDA level improvement should be maybe about 30% next year.
So your room margins are higher, around 35 to 36%, but F&B margins are very low, around 15%. Will we see room and F&B margins growing?
No, F&B margins will always be lower because there is an inherent cost to the raw material which is there. And not only that, in a hotel, suppose you have 100 employees, there are 65 employees are in F&B and 35 employees are of the rooms. So there is a very high labor cost also. So F&B margins are definitely lower, but of course we are now recognizing the fact, and we are trying to now this year improve F&B business as such through more aggressive marketing, so that if the business improves, then the margins will automatically improve. So I see definitely this year there should be an improvement in the F&B margins also.
Wish you all the very best. Thank you, Mr. Balji, for joining in and giving us a heads up on how things are shaping up with Royal Orchid. The stock up 3% in trade.